Hello, everybody, and welcome to this week's bi-weekly community call. We hold these calls every other Tuesday at 8 a.m. Eastern and 1 p.m. UTC, and our next call will be on the March 5th. Today, we have Brave New DeFi, who will walk us through the current active NMDP votes. We will look into how the DAO Teams budget votes finalized last week, and we'll review the oSnap integration proposal with the DAO Treasury that the UMO team had proposed. And then he will recap some of his recent Twitter or X space attendances with OpenCover, Beefy, and another one with the UMA team talking about optimistic governance. And then we'll hear from Hugh with the Foundation team updates, review the recent protocol cover listings on the UI, and also review the last week in cover sales. Let's start with Brave.
Good morning, everyone. I hope you're all doing well and are ready for some governance highlights this morning. I'll take some time to summarize the snapshot results for NMDP number 2 on the next slide. So after nearly a month of review and discussion, the DAO Teams funding proposal for Q1 and Q2 went up for a snapshot vote on the 30th of January. The vote was open for several days, and members ended up voting unanimously to approve the funding request for $153,500 for the next 6 months of funding for the DAO Teams. I'd like to thank everybody who turned out for the vote and showed their support. Everyone contributing within the DAO appreciates the support, myself included. We're still very focused on growth in cover sales and membership. And while R&D is focused on firming up some of the technical mechanisms within the protocol, the community team is focused on marketing, community engagement, education about staying safe in DeFi, and creating greater awareness about the mutual. I'm excited about our upcoming relaunch of the Nexus Mutual DAO website, where we'll offer community members a host of new resources and guides. We'll also have a section that provides an overview of each DAO team, their purpose, priorities, current and past budget requests, team member bios, and compensation information, and more. There will also be a section that the DAO teams can post monthly or quarterly updates to keep members informed of our progress. So you can look for some of those updates on the forum over time as well, but we appreciate people turning out for the DAO Teams funding snapshot vote. We've got a lot in the works, and I can't wait to launch some of these new resources for our members. Moving on to the next slide, I wanted to talk about NMDP number 3, which will open for voting later this morning. I'll talk more about UMA's proposal on the next slide. The snapshot vote for NMDP number 3 will open at 3 p.m. UTC today and will be open for 7 days. During that time, members can review the proposal and vote on whether or not the DAO should adopt UMA's oSnap, which is tooling built on top of SAFE that would allow the DAO Treasury snapshot proposals to execute permissionlessly when a vote is approved if there's a transaction payload as part of that governance proposal. Essentially, oSnap brings the same functionality that's present in protocols that use Governor Alpha and Governor Bravo, if you're familiar, protocols like Uniswap or Compound. But oSnap is built on top of SAFE, so this functionality can be added to a SAFE multi-sig. When a proposal is put up, somebody can include the transaction details, and then if a vote is approved, oSnap can optimistically execute after a defined period of time, which is one of the settings that we have in the governance proposal. So as an example, when the DAO teams submit their next funding request in 6 months, we can specify the amount of NXM required for funding in our proposal. And if members vote to approve our future NMDP, oSnap would allow those funds to flow from the DAO Treasury to the DAO Teams multi-sig 36 hours after the snapshot vote closes. So if you're not familiar with UMA's oSnap, we spoke with the UMA team on Twitter Spaces last week and reviewed their proposal. We had a really great discussion, and myself and the UMA team provided a simplified overview of the proposal. You can find the link to that Twitter Spaces discussion in today's call resources. You can also find that on the Nexus Mutual Twitter account as well. On the next slide, I'll talk about the specifics of this vote. So the actual snapshot proposal outlines the oSnap and snapshot settings. As you can see, the voting quorum, voting period, and challenge period were all discussed in the RFC phase, and that was incorporated into the formal proposal that Bobby from UMA posted on the forum. The voting quorum is proposed to be 50,000 NXM. That would be the amount required to achieve quorum for any snapshot vote that will move funds out of the DAO treasury. What that essentially means is if there are less than 50,000 NXM voting on a DAO proposal, that proposal would not execute and would fail by default. The voting period is proposed to be 5 days. This minimum voting period allows everyone within the DAO to review a proposal and participate in the vote. They can be longer than that, but that's the proposed minimum voting period. The challenge period is proposed to be 36 hours. The challenge period in oSnap is the amount of time that people have to review the proposal and propose a challenge through UMA's optimistic oracle if they believe that the details in the proposal do not match the actual transaction that would be executed. So if there is a flaw, if there's an error, or if someone's trying to attack the governance process and maliciously withdraw funds through a fraudulent governance vote, the UMA oSnap integration has the security feature in there where the UMA optimistic oracle can look at those details, and then UMA stakers can vote on that outcome to affirm the information. So UMA stakers secure the optimistic oracle by reviewing and validating the information that is submitted through their optimistic oracle. So if there is some kind of malicious proposal, that can be caught and challenged and overwritten within the oSnap integration. The proposed snapshot settings, which are separate from the oSnap settings, are essentially creating a threshold for the amount of NXM needed to put a proposal on the forum. This prevents spam and creates some kind of a threshold to prevent people from putting up malicious proposals. So the proposal validation setting is proposed to be 1,000 NXM to post a proposal on Snapshot. This would increase from 10 NXM. This is the NXM requirement for actually putting up a proposal. We talked about that amount before on the forum. You can see the discussion there. But be sure to review this proposal and participate in the vote over the next week. If you have any questions, please raise them on the forum or drop in Discord and ask. We have an announcement that's scheduled to go out on Twitter, and we'll also be sharing an announcement on Discord and the forum about the vote once it goes live this morning. If there's no questions, I'll move to the recap of our discussion last week with Beefy and OpenCover all on the next slide. So last week, I joined Jeremiah from OpenCover and Wiso from Beefy Finance to talk about OpenCover's recent listing of Beefy protocol cover on their platform. For those of you who aren't familiar, OpenCover is a cover aggregator distributor that's built on top of Nexus Mutual, and they're working to make cover more accessible on Ethereum L2s. Beefy also integrated OpenCover into their vault page view. So if you're going to deposit in Beefy protocol and you're on a specific vault page, you'll see an option to buy cover from OpenCover to protect your position. So people can purchase Beefy cover right when they're depositing into one of Beefy's vaults now, which is really great. We talked about the role of on-chain coverage in DeFi, how Beefy Finance works to keep users safe, and what risks Wiso and the rest of the Beefy Finance team see as the biggest threats to mainstream adoption in DeFi. The Spaces was recorded, so you can listen to the recording on Twitter, which we've shared in the call resources for today. We'll be doing more of these Twitter Space events with OpenCover, so stay tuned for more updates. We're also going to be launching our own DeFi interview series in March, which will focus on staying safe in DeFi. If there's a topic you'd love to hear us talk about or a team you'd like to see us interview, please let us know on Discord. Share your thoughts in the chat on today's call or join us in voice now and let us know. But if there are no suggestions or comments, I'll hand things over to Hugh to share his weekly update from the Foundation. Hugh?
Thanks, Brave. Yeah, I think a lot's going on at the moment. Obviously, from an overall perspective, crypto is getting a lot more attention over the past couple of weeks and months. The yields are increasing, which kind of especially puts our kind of core products protocol cover back in the limelight a bit more, and we've seen more take up and stuff over the past few weeks, which is really good to see. So now we're going to be like really focusing on how we deliver that to the most people possible in the best way. So focus on the go-to-market strategy and all that type of thing. So that's kind of broadly what we're focusing on at the moment. In terms of other kind of wider things that are going on, the dev team are working on stuff like cover edits and the implementation of some of the investments for the cover deal, which is progressing slowly in the background. We're working through stuff on the legal side of things first, and once we've signed the documents, which should hopefully be relatively soon, then we can start the actual implementation. So that will put another chunk of the capital pool to work, which will be good to see. And then in a later stage, we'll start getting into the details of what we call the retrocession deal, where they transfer some risk to us. So that's kind of that's going well, but it's interacting with TradFi, so some things do take a little bit of time. On the getting back to the engineering stuff. So cover edits, as I mentioned, cover deal implementation. We're also going through some testing of the new UI. So we're doing that internally as a team to start with, and then we'll be looking to roll it out over the coming month or something as we finalize things. And so there's quite a few bits and pieces going on with that. I think more generally, we're starting to see a bunch of, I guess on the growth side, we're starting to see a bunch of inbound, various different things, slashing deals coming back. So I'm getting quite a bit of inbound there. Interestingly, getting some institutional inbound that perhaps have purchased some ETH already, but looking to take the next step of staking it, and then concerned about the potential slashing risk, and so looking at options there. So there's definitely an increase in inbound on that side. And also a bunch of different projects coming to us, listings and new products and stuff like that. So definitely an increase in, I guess, energy and positivity around the space. Yields are going up, and as I said before, that's kind of really positive for protocol cover. So that's kind of all looking quite good. I guess another interesting development over the last few weeks is where early stages, but we are getting an increase in inbound on potential new syndicates popping up. Some of them I'd say kind of very early stage, and they're kind of investigating what options are available, but great to see that they're coming to us and working out what they can do and what they can build on top of Nexus. So I would, nothing imminent there, but definitely some interesting conversations starting to happen. So kind of, I guess that's kind of linked to the overall market sentiment. So yeah, I think we're quite well positioned with the current market picking up, but we just need to kind of get out there a bit more and make more people aware of us and stuff. So that's going to be a big focus for the team over the coming weeks and months. That is probably the main stuff. Obviously happy to take questions either now or later. So do let me know. Thanks.
So if you follow us on Twitter, you've probably seen our announcement about the Twitter Spaces event that we have with GMX and OpenCover that we're hosting tomorrow. OpenCover recently listed GMX and has a promotion going where users can buy GMX v2 protocol cover and get reimbursed for their cover up to $10,000 per user for the first month of coverage. We're working with OpenCover and GMX to make coverage more accessible through GMX users on Arbitrum and Avalanche, and we'll be talking about GMX v2, how their team views the role of coverage in their ecosystem, and what they see as the biggest emerging risks in DeFi. So set yourself a reminder and join us on Twitter Spaces tomorrow at 6 p.m. UTC. It should be a really great conversation. I'm very much looking forward to talking with Jeremiah from OpenCover and Fredegar from GMX. On the next slide, I wanted to talk a little about some of the newest protocol cover listings that we've put up in the Nexus Mutual UI this week. I'll go over those on this slide. In the last 2 weeks, we've listed Maverick, which is a novel DEX that is built on L2s and Ethereum mainnet, and Equilibria, which is a yield optimizer built on top of Pendle. So far, we've seen staking pool managers open up capacity for all of these protocols. From a pricing point of view, Maverick is currently priced at about 5.2% yields and boosted pools and normal pools on Maverick are quite high, so price compared to available yield is quite reasonable right now. Pendle is currently priced at 5.87%. The liquid restaking craze has really benefited the Pendle folks. Easy ETH, RS ETH, and EETH all present high APYs, which come with the trade-off of selling your points to yield token buyers through the Pendle platform. But yields are still quite high on Pendle. The Pendle product has created fixed yields for some of these liquid restaking token holders in the ranges between 20 all the way up to 36, 37% on ETH within the Pendle markets. So it's pretty crazy to see the speculation on points, but it's been really interesting to watch. Equilibria is currently priced at 8.17%, but it was just listed, so that price should be coming down to the minimum pricing set by pools 2 and 22, which are currently underwriting Equilibria. So there are high APYs on Equilibria as well, related both to Maverick and Pendle LPs. You can look on Equilibria, but Equilibria is essentially like what Convex is to Curve, Equilibria is to Pendle. So you can check out some of the yields that are available on Equilibria and some of the yield opportunities there as well. You can always choose to buy cover for any of these protocols to protect your positions and make sure that a hack doesn't set you back this year. We'll be adding more listings next week, so join us in our next community call for updates on new listings. Keep an eye out on our Twitter account and on OpenCover's Twitter for announcements about new listings as well. If there's a protocol that you'd like us to review for a listing, reach out in Discord. I'll hand things back to Sem to present the weekly analysis of cover sales. Sem?
Thanks, Brave. Let's look at the last week in cover sales. We sold about $790,000 in cover last week, and members earned more than $10,000 in fees. And the previous week was a little interesting. In the previous week, the second week of February, Liquid Collective and the Retail Mutual renewed their cover. So you had more than $11 million in cover sales. Overall, February has seen a good sales in cover as yield started to return to DeFi and our partners renewing their cover, and our active cover amount hovered around $30 million. You can always review the weekly analysis section on the forum if you like to take a look at the different snapshots we have taken from the Dune dashboards, and ask us any questions if you have them on Discord. Let's proceed with the open forum. If any member has any questions that we should be addressing, any other topics that you want to raise, you're welcome to do so right now. But if there are no questions, we want to thank you for joining us. Our next call will be on the 5th of March on the Nexus Mutual Discord, and we hope to see you there. Take care.